I have a couple of topics that I wanted to cover. One is I wanted to talk about the month of September and what it typically does. I'm not a, predictor or forecaster. I don't have a crystal ball, nothing like that, but data is data. And I'll show you data and we'll see. Okay, that tends to happen. And the way this year is setting up, I'll make some observations and kind of share with you what I'm doing. Just if anything, it'll be interesting. Then we can get through the next 30 days or so and see how that played out. We'll see. That was one topic. And then I have a couple of stocks that I just recently reviewed, Hewlett Packard, as well as Dell. They're both dividend payers, pretty good dividend payers. And I wanted to share that analysis with you. Any other topics that you guys would like to cover? Anything that is of interest that you want to cover? All right, cool. So Kiter, EWW as EFT on the Mexico economy. Yeah, let's take a look at that. EWW is an EFT on the Mexico economy. That is very interesting to me because I've heard really good things about the economy in Mexico. And I own one company that does most of its business in Mexico, but I wouldn't be opposed to maybe buying an ETF. Just a little bit of money to put into Mexico. So let's take a look at that one a little later.
Hey, thanks. Yeah, just real quick on ETFs. I don't know the last time you invested in ETFs. I know that you're primarily a stock guy. So I just have a quick tip that I learned recently. If you're trying to keep your fees low, as I assume you would want to, it's not just the expense ratio. Did you know that the turnover rate, so like the amounts that they buy and sell, is actually in addition to the expense ratio? It's not included. So try to find one with a low turnover rate as well.
Got it.
That's my suggestion.
Okay. Yeah, thanks for pointing that out. And Mike, I saw that you wanted to look at WEN as well as DVN. So we'll take a look at those as well. So, there's every year we come up to the month of September, and September tends to have some of the historically really high down days when things really sold off have been in September. So it tends to have kind of a bad rap as a month. It's not a month where you see a lot of rising stocks. So I studied the last 4 years, really 5, but the results, last year in an up market, the markets went down 10%. If you look at the NASDAQ, it was a pretty good pullback that we experienced last year, if you recall. But overall, the year was really good. NASDAQ was up. Year before, markets were really down, and the month of September was down. Now that one's kind of like, well, the whole market was down. Okay. But the year before, 2021, we had a really strong market that had a lot of momentum, pull back in September. The year before, same thing. Market was bouncing off of the COVID lows, and it was just on an upward tear. It pulled back in September, 7%. It's almost like, holy smokes, there's like muscle memory in the stock market here. We get to September, and I don't know if it's these big hedge fund managers kind of rotate. That's the month to rotate. Tax prep, like they're trying to take gains at the right time so that they can then pair them with potentially some losses. There's just some action going on that's mostly selling action in this month of September. Now, how is this one going to play out? I'll let you know in 30 days. Between now and then, I'm glad that I've got a good cash balance. But I'm going to make sure that I don't buy too fast. I'm going to be very selective. I'm only going to buy into things that I really want to own, and make sure that I'm going to see the month through and see if there's a trend. If we leave September and we were on a significant pullback, I'm gonna kind of like just be careful, and that's how I'm treating it. But I thought it was interesting. I put it out there, and we'll see how it plays out. So, Kiter, is the corrections chart you showed the same? Yeah, it's the same. They both went down. I think the NASDAQ has outperformed the S&P, so I wanted to show that. The NASDAQ did like 37% last year, full year, and the S&P did 25 or 26% upside. So you would be seeing the same corrections. It's not like one went up and the other went down. They both went down. But the S&P, I would say, didn't go down as much. The NASDAQ went down these percentages. So, all right. So let me share something else. So let's get into Hewlett Packard, and then we'll get into some of these other stocks you guys want to look at. So I don't know that Hewlett Packard needs a whole lot of introduction, but I like this stock. It might be, for those that like dividend stocks, this pays a 3% dividend. Now, I don't exclusively look for dividend stocks. If it's a dividend stock, fine. I'm really looking for appreciation over, a 5-year term. This one's done good over the last 5 years. Now, last 5 years doesn't mean that they're going to match the next 5 years. But the story that I like about Hewlett Packard is I've listened to their earnings calls, is like the PC market has not been good over the last couple of years because a lot of people bought PCs during COVID because they had to get on Zoom. They had to do a bunch of stuff. So they refreshed their laptop or computer during 2020, 2021, and pulled forward maybe some of the natural demand that they would have had. Well, the good news is that if we look at the financials for Hewlett Packard, and we look at the quarterly, they're now growing again. And I think that growth is going to be sustained because we're going into a PC refresh. Some people are excited about the whole AI thing. I'm cautiously, interested in AI, but I don't know that it's going to change the world overnight. I think it's going to take a while, but there is a refresh going on, and I think Hewlett Packard's going to benefit from it. They're producing more cash than I expected, so that's always good. They produced more and more cash, so they can more than afford their dividend. And I'm looking at the quarterly, so I'm going to look at the annual. Last year for the whole year, they did a little over 3.1 billion. And right now, trailing 12 months, they're at 3.5 billion. So they're really growing their cash flow nicely. And we're going to look at Dell next, and we can compare the two. And you think the quality of Dell is better than Hewlett Packard. I think they're similar but different businesses. I would say that Dell is more diversified. I would agree with you. And I do like some aspects of Dell, and I'll comment on that later. All right. So that's Hewlett Packard. Balance sheet's good. They have very low debt. Analysts think the stock is priced fairly, and they did rally quite well last week. So they from their earnings, what was interesting is after we closed on, was it the 29th? So that was Thursday, or was it Wednesday? So the stock went down in after hours trading, and then the next day it opened up higher. So it was like, whoa, which one's it going to be? So it really rallied nicely. So it had a nice 5-day, and we ended the week on positive, movement for Hewlett Packard. So when I look at the valuation of Hewlett Packard, it is nicely discounted. Blended discounts 44%. So it's a nice stock. This one I'm not jumping to buy more shares because I do own about $45,000 of Hewlett Packard. So I think I've got enough. Now, if it pulls back nicely, like the price really drops, I'd be buying more shares. So Hewlett Packard announced, along with Hewlett Packard, Dell announced. So let's take a look at Dell. I think I've got that near here. And this is all updated. I already updated this. And Dell is been really benefiting from the data center build out that, I think AI is creating a lot more data center revenues, and they've done quite nicely over the last 5 years. And you're right. I think it was Sia provided the comment. If you compare the last 5 years, there's no contest. Dell has outperformed Hewlett Packard, most definitely. Analysts think that it's a discounted strong buy, so that's interesting. The last month, they're about even, and I think they had a decent week, up 3.15%. They did kind of have a little bit of volatility, so it provided an opportunity to investors. Now, the one thing I would say, the market cap's much higher, 81.7 versus 35 billion, and the revenue is higher. What I do like about Dell is they are exposed to the enterprise. They do servers and technologies that big companies want. And while Hewlett Packard really does only consumer technology. So that is an aspect of Dell that I like. Their forward P is nice and low at 13. They pay a dividend of 1.5. I think part of why that dividend is lower is that it's really done well over the last year. And I would agree that if you bought Dell a year ago, you made a very good move. The thing that I always find hard with Dell is that they don't produce a lot of free cash. And as you guys know, you guys have been watching my videos, the market cap is almost triple what Hewlett Packard has, but the cash flow is the same. So for the same market cap, Hewlett Packard generates more cash, double the dividend. What are these stocks going to do over the next 12 months? Nobody knows, but I think that Dell is fairly priced. On cash flows, it's priced at a premium. On earnings per share, it's priced at a discount. And I take cash flow method as a greater weight than earnings per share. It's a quality company. My only concern with this stock is a lot of the gains are pretty much in the stock. How much higher is it going to go? I don't know. If you think it's going to go up higher, more power to you. You can follow that earnings per share momentum. They did have a good earnings. They grew nicely. I think their revenue is growing 9.12%. That's a nice growth rate. They did have negative growth for months, and you could see that refresh of technology because these guys do both consumer and enterprise. So you can see the growth is really beginning to kick up for technology. So I think either one would be good. Pick the one you like. I'm picking Hewlett Packard. I bought Dell and owned it for less than 24 hours and made a little bit of money because I thought the stock was going to rally after earnings, and I was correct. And call me a day trader on one stock. So I did own it for one day. Cool. So, Sia, any further comments on Dell that you wanted to put out there? Either on, let me check the chat here. Yeah, and I can respect your opinion that it's higher quality because it's certainly performed better. Can't argue with that. I think it's better diversified. Can't argue with that. So I could see that point of view. So, all right. So let's take a look at this ETF. Hopefully it comes up here. EWW iShares. So I like the idea. Let's just look at a few things. So EWW ETF. It's the prospectus or perspective. What do you call the document? Is it the perspective on an ETF? Well, hopefully it is. Yeah, here we go. So the things I'm looking for is, what are they invested in and how much fees, right? Gross expense ratio is 0.5. That's not bad. Okay, 0.5 ain't bad. I just didn't want to see like a 1 or a 2. Be like, man, that's a lot of expense. So these guys, so can you guys give me more information on this? Well, maybe it'll give me it. So I'd like to know, what's in this. I think in general, here we go, fun page. Sorry, it's right in front of me. So total return, August 29th. I wonder how long that is. And is that for 12 months? Expense ratio 50%. 52-week. It's near its bottom. So 52.98. The low has been at 52.52. The 1 year, it's down. 3 year, it's 8 to 9%. That has not kept up with the U.S. market, right? I think you guys would agree. You can just buy the S&P ETF or a NASDAQ ETF, and you'd be outperforming this by a very, very good margin. Yeah, this one would I'd have to get my head around it. The reason that I don't like ETFs a whole lot is that I'm not sure what's in the sauce here. It's like spaghetti sauce. You buy it in a jar, it's done. It's probably going to taste okay, but you don't know if it has, Does it have natural garlic or just garlic powder? What are the ingredients? And let's take a look at the holdings. I've looked at some of these companies. Like this one's a winner. I've seen good returns for it. This is the cement company. This is the food company. I'd probably still be in the camp of I'd rather pick up a few good industries down in Mexico that makes sense to me. Like steel production and creating rolled steel. That's the one company that I have, Ternium. And I really think it makes a lot of sense because if you create rolled steel, you can make it in China, but then you got to ship it across the Pacific. So Mexico has an advantage there. They can create rolled steel and they put it on a train and it goes to its destination up in the US, or they can ship it to a local car manufacturing company or an appliance company. There's just a lot of efficiency there. I'd probably still want to pick a few companies in Mexico that make a lot of sense because, the Mexican economy is not that different than the US economy in some respects. We're kind of coupled together. A lot of US companies use the lower cost labor down in Mexico. So they have production down there. So it's not that hard to understand. If you asked me to invest in China, I'd have a harder time. If you asked me to invest in Japan, it'd be harder. Even in Europe, if you asked me to invest in Europe, I wouldn't know the pitfalls there, but I'd be quite comfortable picking a few stocks in Mexico. I've actually done homework on Mexican stocks. I didn't pull any triggers because I just didn't know it enough, but maybe going forward. So good idea out there. I'm still going to come back. Me personally, I wouldn't buy this ETF. I'd probably just look at the companies and do my homework and start learning more and probably buy individual companies down in Mexico. So thanks for the idea though. Glad you went there. All right. So let's talk about Wendys. All right. So I think, Mike, I've said it a few times. I don't like restaurants, but let's look at Wendys. It's a very small cap with an attractive dividend. So it's a good income stock. P ratio looks reasonable. Over the 5-year, it's been a stock that really hasn't worked a whole lot. Over the 1 year, hasn't worked. So the stock is down. So are you catching it at the right time? Maybe seeing good appreciation. Well, they're growing their revenue. Very good. So they're showing growth. Now, are they expanding their profitability? Let's take a look at that. So, yeah, operating income is growing. That's a good sign. Very good. So I wonder if and I don't go to Wendys. I can't remember the last time I went there, but are they raising prices or how are they able to get their operating income to rise? Or do they have more customers, more stores? Okay, and then, so it looks like net income looks good. When you have positive net income like this, just well-operated restaurant chain, that means that there are no big surprises, nice and steady. And free cash flow. Okay. Cash flow has been growing. 260. So to me, this would be like a $2.53 billion company. And it'd be hard for me to get to 3.44 billion. I have a personal opinion that with stocks like Wendys, where everybody can understand that quite easily, a lot of retail investors will buy into it because, I know Wendys. I like their menu. So they invest. Hey, I get that. And that's maybe why there's a little bit of a premium. McDonald's is the same way. I wouldn't own the McDonald's stock. Every time I look at it, it just doesn't look right. So the cash flow doesn't support the valuation, but on an earnings per share basis, it looks like analysts, and how many look at it? 20 analysts. Wow, that's a lot of analysts. They are looking at it saying, wow, look at this growth. Okay. We're going to grow from $1 a share up to 123. Very good. Yeah. So if you looked at earnings per share, it's probably going to do well. This stock's probably going to rise a bit, is my guess. If we have any type of economic kind of pullback, like, the economy goes into recession and so forth, I think stocks like Wendys do well because people go from, hey, I was going to, X restaurant and it costs $20 a person to eat there, but, times are tough. let's go to Wendy's, and then we can, get in there, get in and out for, $6, $8, $10 per person, and we're good. We eat a delicious meal and then we leave. So it looks like Mike's got a few comments. Yeah, I like Starbucks just for the simplicity, and I think, they have clear dominance in their segment of the market. Ding, ding, ding. We're seeing the same thing. Yeah. I think the lower priced menus for restaurants, they rally in down markets. And I would argue that if I went to the store and bought ground beef, vegetables, buns, came home, barbecued, made hamburgers, I could not beat the cost of Wendy's. I might feel like I, maybe made the burgers a little tastier, and there's that pride of making it. But restaurants really know what they're doing. That's what they do for a living. I don't cook for a living. I invest in stocks and real estate for a living. So when we hit it, yeah, the condiments, exactly. Once I buy everything, I'm in each burger for like $10, $15 a piece. And then I go to Wendy's and they give me a nice burger for $4. And I'm like, I can't beat this. I can't beat this value. So, you may have something here. It's not the right thing for me, but you may have something here. And that dividend ain't bad. I mean, you got a stock that's been discounted for a year. It's down 15.74. It's been growing. Look at this volatility. It's been up, down, up, down. Wow, it's like a wood saw. I like volatility. I like good companies that I can understand, that have volatility, so I can buy at 15 and hold it at 17 and get paid a dividend of 6%. I'm okay with that. I'm okay with that scenario. So good luck with it. I don't see any giant red flags. If you're good with restaurant stocks, this one looks pretty good. And then DVN, Devon Energy. All right. So energy prices have been down. So stocks have been down. And let me reacquaint myself with Devon Energy. So Devon Energy, an independent energy company, engages in exploration. Okay. So these guys are a little bit like Occidental. They're upstream. They're exploring. They're finding the oil. They're drilling a hole in the ground and, extracting oil, getting it out in its raw form, which is crude oil or natural gas. And then they pipe it or get it to market. And then somebody else refines it and somebody else sends it downstream and sells it at a retail gas station, or it gets consumed by farmers. Natural gas turns into fertilizer, or it gets consumed by commercial accounts and so forth. Now, I think energy right now is a good idea because stock prices are down. You can see the 5-year, right? It did quite nicely when oil prices were going up. Boy, that's a nice chart. Let's take a look at it with Google because I like how it sets up a stock. So here's Devon Energy. Let me make this a little bigger. I'm not sure why it's so small. So oil prices were really low during COVID because nobody was driving. But if you bought this stock, wow, look at that rise. Beautiful. Because oil prices really took off. And oil prices have been coming down. Now, oil prices are not going to stay down forever. They tend to be kind of have these long-term trends. And we've been on a couple of years, coming up on 3 years of a downtrend. All we need is like some type of disruption to supply, and then you're going to see oil rally. If oil gets like to $90, $100 a barrel, Devon Energy, the stock will double in value. It just very quickly, it'll just take off. So it's not a bad move. I own Chevron and I've been buying into Pump because Pump is doing services for energy companies. I have thought about looking at a pure play oil exploration company. Warren Buffett keeps buying Occidental. Occidental is more like Devon Energy than it is Chevron or Exxon. Those are fully integrated energy companies. This isn't a bad idea right now. It's not a bad idea to start dollar cost averaging into a Devon Energy or an Occidental. And hopefully you bought into it, you averaged in nicely, maybe takes a couple months, maybe 6 months, oil begins to rally and you're sitting on a really nice gain. So, and they do provide a dividend, do they? Yeah, look at that dividend. So while you wait for oil to rally, these guys will pay a 4.5% dividend. I like it. It's a good looking idea. So you can buy Devon to pay for all your gasoline cost with your dividend. And you can buy Wendy's and you can buy hamburgers and cheeseburgers with the dividend. So you got your fuel costs covered with your dividend and some of your food costs with your dividend. That's how I feel about my Chevron stock. They pay me a big dividend. And each quarter I own like $120,000 of Chevron. It pays a nice dividend. So they pay me like $1,000, $1,200 each quarter. And it doesn't feel as bad when I gas up my car and I'm paying in California $5 a gallon. It's like, all right, it doesn't feel as bad. So PBR, yeah. So PBR is an oil company down in Brazil. I'm going to leave that guy open in case somebody has a question on it. PBR is down in Brazil, I believe. Yeah. And these guys, man, look at that dividend. Holy smokes. Look at that volatility. Holy smokes. So the 1 year, not bad. I mean, 6% is not bad. If you look at Devon, I think that one was negative. And if you look at Chevron, it's negative. 5 year, not bad. I mean, you're getting paid this whopping dividend that I imagine they can afford. Yeah, this one looks okay. And they're trading on the New York Stock Exchange, so that's fine. Okay. Yeah, I would just you know, I like having like 1 to 2 stocks in each industry, or that way I can pay close attention to my holdings. And I wouldn't want to have like 4 oil companies because then I'm like, man, I've got 4 things going on. Can I concentrate on one and just really always be up to date on Chevron, always be up to date on Pump. But I wouldn't mind looking at an oil exploration company just because they're so discounted right now. It's not a bad time to look at them. They're very discounted. So good ideas. And this one's down in Brazil. I have nothing in Brazil right now. So I used to have a StoneCo, which is down in Brazil. Yeah. So you have a lot of positions. Yeah, I know the feeling. Let me show you my portfolio. And, I love investing, right? I love it. But what I love the most is making money and having a great return and being able to follow, like, have a good plan, have a logical plan and following it through and understanding, if I lost money, learn something from it. If I made money, learn something from it. And if I have just a few stocks in like here energy, if Chevron hasn't been doing all that great, and if it does something and the stock goes down, I study it. Okay, what happened? Is it moving with the market or is it not keeping up with the market? So I get what you're saying. I'd be careful not to have too many. I'm trying to find a way to get rid of or close out some of these stocks because I do think that, man, like healthcare, I'm really bullish on healthcare. I probably own too many. So maybe I need to kill one of my healthcare positions. They're doing well, and I think they're going to do really well going forward. But maybe I should kill maybe CVS. We'll see. So another feeling. All right. So yeah. It's good that you own, healthcare stocks. I think healthcare is going to do well. It's been doing well. If you look at the monthly, and if you look at, I think it's beginning to build some momentum. And as investors rotate out of technology, I think they're going to especially go after biotech, high growth healthcare. I think that's going to be doing quite well. All right, cool. So I think we can keep today's session short and sweet. This is your time. Any last questions before we land the plane? CRM. So Salesforce. Salesforce did well after their earnings last time I checked. They didn't do well on Friday, but let's look at the 5-day. whoa, 5-day doesn't look good. Maybe in after hours they were looking good, and then so you see this pop. That's what I was referring to. They went up like almost 5%, but then it faded, so it sold off for the week. So I think Salesforce is a pretty good quality stock. You know, if you look at their financials, they've been growing. So it's a growing software company. And the whole, you know, these stories for AI are quite influential. And one of the threats to Salesforce is, hey, AI is going to make it so that companies just have artificial intelligence answer questions for customers when they call in and they say, hey, I need service on my product, or, you know, whatever. And right now they may be using Salesforce software to provide service. So a lot of those seats that a company would buy to give to their employee to do their job would go away because AI is kind of taking care of that. I get that, but we're nowhere near that type of disruption. Maybe it happens in a couple of years. So there is that kind of headwind that Salesforce is faced with. But I would say, man, they keep growing their business. So, you know, how have they done over the last, let's say, 5 years? Well, it was a pretty good. These guys, along with everybody else in 2022, were sold off. They came back and provided a really good return. It's sold off to some extent, so it's not a bad idea. I own Adobe, and I saw Adobe have a similar pullback where AI is supposed to replace a lot of what Adobe does. I don't believe it. I think someday Adobe may actually have the AI apps that really everybody wants. So it's both an opportunity and a threat. And Salesforce is trying to do that, which is, hey, they're the ones that are going to be selling the AI to companies that want to, you know, lower the number of people they have in their call centers, and then just have automation take care of it through artificial intelligence. So I get that story, but Salesforce may be the one that capitalizes on the idea, because like the chat GPTs of the world, they don't know how to provide service. They don't know industries, and Salesforce does. Salesforce has industry expertise, you know, like how do you provide service for, let's say, travel? How do you provide service for consumer packaged goods, and so forth and so on? So I think software companies have not kept up with the big infrastructures and the big hardware software technology companies. So they're not a bad idea to look at. And Salesforce, I thought, rallied after their earnings because they had positive earnings, but it looks like the stock continues to be discounted to some extent. I haven't valued Salesforce, so I can't say that. But I know Adobe is discounted by about 10%. And I really hold Adobe in high regard. I think it's a quality company. I think Salesforce is a quality company. Salesforce is number one in their category for customer experience, Salesforce automation, service. It's kind of like that's their corner, and they do it the best. They've outperformed everybody else. So I like that aspect of Salesforce. All right, guys. So I'm a big fan of Zim. Yes. So I don't know that I have anything against SBLK. Maybe I said it, but maybe I said it in context of, hey, I like Zim more, but it didn't mean that I was saying something bad about these guys. Let's take a look at this one. I think that so these guys are shipping company. So these guys do bulk commodity. So these guys do a different type of shipping than Zim. Zim does like containers, you know, like full of products from China that are going to come to the Pacific coast in the United States and that kind of thing. These guys are like, hey, we're going to put a bunch of raw material, iron ore, coal, minerals, grains, fertilizers into a giant ship, and they put these lids on them, and then they sail them across, you know, oceans. I owned another company for a while. The company was called Panel, and I made good money on it. They provided a nice dividend, but let me show you the chart. I bought these guys in like 2020, and it was a really good time to buy it. 300%. I did really well with Panel. So I'm good with shipping companies. I think that I don't understand why they're not valued more, because they make money, they deliver dividends, they deliver cash, they buy back shares. It's almost like why? I mean, if you had me choose between Panel and a retailer, I'll take Panel every day. I switched my investment from Panel to Zim because this did really well, and then the Zim stock I thought was misunderstood. It's like the stock market was just out of their minds. Sometimes the stock market is out of its mind. Should be on some type of medication. But if we see Zim just took off, Zim's yellow, and then it just got crushed. But you see how like Panel just kept going up, which was kind of cool. And so Zim was sold off so bad. I'm like, well, I'll take my gains on Panel. Thank you, stock market. And I'll start buying into Zim. And so far, Zim's been good. Zim's been a really good move for me. In the 1 year, it's up 52%, pays a nice dividend. It's defying the market. The market's saying, oh, that company's terrible, but the company comes out, it's growing its revenue, it's doing the right things, and it bought new ships. So I've got not a big investment because it's still a shipping company headquartered in Israel. It's an international play for me. I've invested $17,000 into it. It's worth $24,000. I'm up 39%. Pays a nice dividend. I continue to buy shares on pullbacks, but I just don't accelerate my buying into it. It's not like I'm buying. Like my biggest accelerated buy right now is Amazon. I cannot buy Amazon fast enough. I'm buying $1,000 to $2,000 a day. I've got 2 open put contracts on Amazon, but those put contracts are probably not going to do much because I bought the put contracts and then Amazon started to rally. So I made money on selling those contracts, trying to get you guys a nice chart. So I saw the big drop in Amazon. I'm like, buy. And I think other people are feeling the same thing. So I can't buy Amazon fast enough. I might have to double my buy quantity because the stinking thing's rising too fast. You know, I'm spoiled or I got something wrong with me when I'm complaining that a stock's going up too fast, but you guys know what I mean. We'd love to buy right and see our investment go up. Now I need to update the stock price to show you what. So 178.50. I still think Amazon has an 18% discount, and I'll take it. One of the big regrets I've had over the last 12 months is, why did I sell Amazon? Why did I sell it? You dummy. I was like at $80,000 or so of Amazon, and it takes a while to build back up. So I don't think I'll ever sell it again. So, all right, we're touring the whole economy. I did buy it when it dropped. Mike, I bought loads of Amazon. I showed you what I did with Panel. I bought Amazon, like, I just bought big. And from here to here, it's just been a terrific stock. I bought here, sat on my gains, and every pullback I would buy, and I sold like around here. I think I sold right here. Then I felt like a genius because it dropped. Oh, yeah, man. See, I sold at the right time. Yeah, except the market just kept going up. It's like, oh, man, I shouldn't have sold it first. I think they're terrific. They're number one in their category. They're one of the most valuable companies in the world. I mean, the list is long why I want to own Amazon. So, all right, guys, let's kind of end the show. Thank you, sir. I appreciate you keeping me honest. I will not complain about gains. I will thank the forces that are out there in the stock market. I'll be grateful for the gains that I've got year to date. I was grateful to get out of August with a big gain. I thought I was going to have a horrible month. If you look at August, right, this will tell us the first couple of days were horrible, like down 6%. And it's like, holy smokes, this is going to be a really bad month. And then the market picked up from there and ended nicely. I'm like, wow, that ended a lot better than I thought it was going to end. So you're right. Thanks for saying that. I'm going to improve my attitude. All right, guys. So thanks for tuning in. I really appreciate it. I hope you guys enjoy in the US a long weekend. Enjoy a good meal. And then we'll start trading again on Tuesday. And I'm going to be streaming each morning at 6 a.m. Pacific, 9 a.m. Eastern. I'll see if I can stream in the afternoons as well. But as always, just contact me on Discord or however you want. Mike, I got your email. I'll change your email address after this session. And I really appreciate you guys. Thanks for tuning in, and good luck.